Hello everyone, this is Fair Value Finder, and today we're going to do a quick little review of how everything has performed so far. So I have been setting up portfolios based on my ratings. We have a hold, a sell, and a buy. So I've given 6 holds, 8 sells, 7 buys. And I'll let you guys know if I ever change my mind on any of these. So I've been putting them in here, assuming that you do 1 share at the price used for the calculations when the video came out. So we'll start with the holds and run through these. The worst performer is AbbVie. For this one, it's down over 7.5. It could be reaching the buy zone. We'll have to look at Q2 and see what's going on there. I mean, if it's down more than 10%, I definitely would look into it now. But it's trending towards where we might take another look at that. Coca-Cola, like I said, it was just a very elevated price. Fair value would be in the 50s. Like 50 to 55, which means value investing target would be in the 40s. I mean, preferably the low 40s. Microsoft has basically been running since that video came out. I said I didn't see a reason to sell it, but it was just way too overvalued for me to buy. It's up over 12%, which kind of makes me want to move it to sell. But like I said, there's nothing in the numbers that makes me think that it's a bad company. It's not a bad company. It's just the market has put a bit too much on it. G&E, anything within 1-2% is basically flat. NVIDIA, we just did the other day, so there's no surprise there. UPS is kind of running. It was 2 days ago. It's up 2.25%. That's probably just off earnings. It had my interest peaked if it dropped, but it's going up. Yahoo Finance says 5 of these are overvalued, 1 is undervalued, and I mean, I think I tend to agree on that. So if we go back out, we can now take a look at what I have given a sell rating. We have 8 stocks here, starting with PepsiCo. Well, actually, our worst performer, AT&T, down about 12%. That is no surprise. I mean, we saw it's just a declining company. It was overvalued from the fair value. So no surprise there. I think it's going to stay on the sell list for quite some time until they're able to start turning stuff around. Procter & Gamble is our second. No, actually, Viatris is our second. That's my most popular video at this point. I said what I thought about the stock, and it looks like I was right. It's down 7.23%. They can definitely turn it around. If you think that they're going to turn around, now might be a pretty good time to buy in, because you'll probably see some pretty good gains off of investing in it now if they are able to turn things around. But I'd like to see that start before I start buying it. Then we have Procter & Gamble, still very overvalued. I think fair value, I had it around $100. Same with PepsiCo, I have it around $100 for fair value. Altria, just a lot of risk, decline in the company, and then there's just a lot of legislative risk to holding the company. So that's why I have it on the sell. I sold out of my position. VST, I'm still riding a covered call on this one. It's no surprise. I mean, they were at pretty high valuations. In the teens would be a much better price for it. AMD, insane run, up over 51%. The only green that you see on this sell list, the only green, but the portfolio is still up because it's also one of the more expensive stocks on this list. For this one, and they're being propped up by the NVIDIA earnings just the other day, and I feel like they'll both die down over time. They're probably at pretty high valuations. That doesn't mean I'm going to make it a sell. I don't hate the company. It's just the market likes it too much again. Leggett & Platt, I sold out of this one. It's just a declining company. I think it was like right about fair value, but going forward, if they're going to be declining, then it's not worth being in. And it looks like this portfolio is performing on par with SPY. 6 overvalued, 1 at fair value, and 1 undervalued stock. I believe the at fair value is AT&T. And then I clicked through here and I could not figure out which one they have as undervalued. And then we have the buys. So I'm not surprised that the buy portfolio is down because we're trying to look for companies who are kind of in turmoil at a turning point, and they're beaten down. We don't know when the absolute bottom is going to be, so you'd expect to start a position out in the red. And that's the case for a lot of these. Eastman Chemical, it was trading like right at fair value, and they had talked about how they saw some potential for growth in other venues. So I put it on the buy list. Honestly, I probably should put it on the hold list. I'll be a little bit more conscious about that going forward because I think it's the same case with Kroger is like right at fair value, kind of in between current value and forward value. Tyson is definitely undervalued. Realty Income, I like in the 50s. 3M dealing with a lot of legislative stuff. I think that they'll be fine in the long run. I have been picking up a little bit more myself, down 7%. So it's almost reaching like a definite buy more for me. I mean, I wish it would go lower. Let it, because I will definitely buy as much as I can. It's a massive, massive company. And my old employer, we used to work a lot with them, and our best-selling products came from 3M. GGG is almost exactly flat. That was trading basically at fair value as well. So honestly, a lot of these buys should be holds now that I'm reviewing this. Tyson definitely was a buy, and then 3M definitely a buy, and those two almost counter each other out. I mean, if you were to go dollar for dollar, you'd basically be breaking even if you bought the same amount of each of them. And it looks like this portfolio has been way underperforming this buy. No surprise. I mean, that's what we're looking for to get things onto this portfolio. So I also have Tether on here because I'm trying to figure out what to do about dividends and about trades. So if something were a buy and it goes up 20%, we reevaluate and decide, okay, move it off of this list, make it a hold, make it a sell. Do we keep the dollar value on here to see how the buy portfolio is doing, or do we just forget about it and just say, okay, these are the current stocks that we have on these lists? So I'll be curious to see what you guys say about that. And if we do dividends, I mean, I can take it off the cost basis, but it'd be a lot of work to track all of that. So let me know if that's something that you guys are interested in. I'll definitely do it, but it'll be a bit more. That's where everything stands today. I mean, it's so early on that there's nothing surprising here. I mean, we're not expecting a whole lot of movement. I mean, the sells being propped up by one stock. Everything else is red. The buys kind of all over the place as we'd expect. And the holds, I think they're performing about in line with market. They beat the market out today. They outperformed the market by 0.2% on the day. Basically, how I rate these are, how I have been for the buys is at fair valued or undervalued. If we're going to actually go the value investing route, we'd be looking for something 15 to 20% underneath the fair value of the stock to have a margin of safety and not have a super decline in the company's numbers, or at least have a route for improvement. Like, revenue's been stable, if not growing slightly, but the expenses have gotten out of hand and they plan to cut those, then that could definitely hit this portfolio. The sells, it's just overvalued and or company is declining. And holds, it might be overvalued, but there's nothing wrong with the numbers. So it might just not be a value company. The market may value it in a different way. And so I'll keep updating these with each video that we put out. I feel like it's interesting to track and see day by day how things are doing. And please let me know if you disagree with any of these. We can review them again. Just know I'm going the value investing route where I'm looking for something that's hitting certain metrics. We want high ROE. We want them to be buying back shares. We'd prefer a positive tangible book value. We want to see them growing revenues between 5 and 10%. And if they're not hitting those, then it's not something that I'm interested in with my strategy. If you saw anything in these portfolios where you're curious about it, why'd I put it on these lists? I have a video out for each of these, so go and check it out and see what the numbers are and where I think that the stock is. Thank you guys for watching. Please like, comment, subscribe. Let me know what other stocks you want me to review, and I'll catch you next time.